So let's bring in Frances Stacy for more on this. She is the Director of Portfolio Strategy at Optimal Capital. Frances, great to have you with us. So, Frances, we saw the Dow react favorably yesterday when news of the Fed rate hike became official, right? So why has the Dow been so far down since the opening bell today?
Well, it's interesting. You have competitive narratives. Some people think that the Fed is not going to make it to the 10 rate hikes that have thus far been projected by the markets this year. And some people think that they are going to make it. And so any little sentence that the Fed does, traders are parsing that out and trying to recalibrate and reprice those. The biggest thing that he said yesterday from the mainstream perspective was that he did not see a 75 basis point all at once rate hike on the table. What's important about that is every time he makes a move, whether it's rate hikes or balance sheet reduction or anything he does, there is a lag effect and the system has to recalibrate. So there's more inherent risk of not having a soft landing or quote unquote breaking something if he has a 75 basis point hike at one time. And so markets reacted favorably to that. Today, we saw jobless claims go up. And tomorrow's jobs report, I think people are getting ultra defensive. The reason for that being the fact that he suggested yesterday that the entire reasoning and justification for his soft landing narrative is determined by labor markets softening.
Frances, you mentioned jobless claims up more than expected. As we've mentioned, the Fed hiking interest rates to combat the historically high inflation. Markets reacting. What does all of this reveal about the overall health of the economy?
So the thing about markets is markets are going to parse through the Fed data very, very quickly to try and see if he's going to be able to stay on the very aggressive, historically aggressive tightening path that he's on. So, for instance, tomorrow, I think it's expected that I'm looking at wage growth, okay, because that's really what he's saying. He's saying if the job market is less tight, there will be less upward pressure on wages. That upward pressure then goes as input on balance sheets for companies, and then that they pass through that cost increase to prices for consumers. So he's counting on the labor market to give us a soft landing. Unfortunately, that's a very lagging process. And I think we're going to see I think we're probably going to see a downward revision in growth. And I think there's a good chance that we are already in recession, given the negative print for the first quarter. We had 6.9, almost 7% growth in the fourth quarter. And then the Atlanta Fed, who was the most pessimistic, thought that we were going to drop to 1% in the first quarter. So that's plus 1%. So that's still positive growth. And we actually got negative 1.4%. So now we are in a contractionary environment. And if we have that consecutively for 2 quarters, then by definition, we're in recession.
So let me dig into the labor numbers again really quickly, if you don't mind, because we do know that there's been a trend of people leaving their jobs, right? Assuming that the labor market is so hot that they could jump out of a job they didn't like straight into a job they liked better. Do you think that this pool of workers may have overestimated what was waiting for them on the other end, and this could turn into, like you said, more weak jobs numbers?
Yeah, I think the gamble with regards to labor participation, which he noted yesterday that it was important, even if it upticked unemployment a little bit, to have more people come into the labor participation, is how many people retired early. If people retired early, they're unlikely to come back. So he's really betting that a lot of those people that left the labor force are going to come back. And we just don't know yet and won't know for some time how many of those people retired and are really coming. Maybe they come back because their credit card interest rates are going crazy, or they now need a job for one reason or another, right? But maybe they don't come back. We have no way of really knowing that.
Very good points, Frances. Stacy, we appreciate your financial insight.